We were only 20 points away from my original price target of 4,160 on SPX on Friday that I gave you guys all the way back when we were around like 3,760 SPX back in this big chop range that we had over here. Pretty crazy to see this actually play out real time. Now, again, yes, I was pretty confident in my prediction. I shared with you guys each week kind of what I saw going forward, give you guys kind of like a glimpse into my thinking, but it's still pretty cool to see it actually happen, especially when we're that close to that price target. I personally don't have any more longs, got out of those as we went up because no reason for me to be greedy. Made a lot on this trade, really happy with it. So going forward though, we want to start looking at potential for weakness in this boxed range that I have here. I've shared with you guys the boxed range for a while now, although the only difference was we were all the way back around like 3,800, 3,900 before, so people really weren't paying attention to this box, but it's the same exact one that I drew like months ago on here, and this is a key supply zone for the market, and this starts at 4,160, goes all the way up to 4,220. This should act as some form of a supply zone as we go up, which can lead to a lot more selling pressure, kind of similar to what we saw over here during this heavy consolidation phase that was like literally over a week of consolidation. We just saw the price chop in a range. It doesn't have to happen this way where we're up here and just consolidate, but there's going to be a big battle between bears and bulls in this range, and you just need to be cognizant of this happening, and you want to look at certain other data points and variables such as order flow and dark pool, which I'll share in this video, to give you a sense on if there's a potential for a pullback off of this, and if so, would there be a potential shorting opportunity on it. So the month of July closed very, very green. If we just check here really quick, the 1 month candle, you can see here, I know there's a lot of lines, but we had a very bearish candle for June, and this got picked up tremendously for the market that following month here of July. So very bullish market candle for this month. However, as you can see here, if I go to our historical flow tab on Cheddar Flow for SPY, I filtered for over 1 million in premium, by the way. Started beginning of July to end of July. You could actually see it was 87% put flow to 13% call flow, which begs the question, why was this the case when we were able to rally so much in this month, like you can see here for July? Did big money really get it that wrong, where they just continuously lost as we went up? And I'm sure there were a lot of orders that we saw that actually did not make money in this month, which characteristically had made a lot of money in previous months, because so far these big whales have made a lot of money on the downside. So definitely they could have been squeezed out during this month. However, if you don't judge a book by its cover and look into a little bit more in depth of how these orders are structured, you notice that they've actually been switching this month to a further expiration than we were seeing previously. So you can see here, 12/16 is starting to become a expiration of their choice. This is pretty far out in terms of expiration because this is of December of this year, and they're picking still a far out strike price as well. We saw this 381 here. Similar thing for the 9/16s. This is 2 months out from when they're getting it roughly. For these 390 strikes, this is also very far out of the money from the current price, where they got it at 408. 391s, a ton of them right here for millions. Look at this premium here, a lot of money. This is not just a typical retail trade or anything. This is a lot of money. This is a whale that is buying these puts, and they're most likely being bought because you can see here they are above the ask. So it's very interesting to see a lot of these orders with further out expirations, because previously we had seen ones that were within a month, or at least the furthest was within a month and a half, and now we're starting to see 2 months out, or even way more. We could see like 4 to 5 on some of these months out, and it's just characteristic through all of the orders we were getting throughout this month. 12/16, the strike of their choice. You could even see here 350 strike on this 12/16 order, a lot of 385s for these 9/16, and it's just continuous throughout this entire month with a lot of premium on each of these. So I'm not going to go through all of these orders throughout the month. I just wanted to show you and point that out to you because it's a very key discrepancy compared to previous months we've seen. Most likely, these bears, especially these whales that are bears, are choosing a further out expiration because they're unable to predict the day-to-day price action in terms of this month of July or maybe even early August, and they know or have a very high probability of knowledge that there could be a potential of a large pullback in the fall months of maybe end of August to October. And because they don't know when that specifically will happen with precise accuracy, or maybe they do and they'll wait till they have a better entry level, they're choosing right now to load these long short positions. So they're adding this longer expiration. We'll probably see a lot more of the 10/21 expirations too. But we've seen a lot of these 12/16 ones like here, and they're starting to load long for the short position because they don't want to miss that eventual move. So they're loading early on those, and they'll let it play out as we go forward here and see what happens during these fall months, which, by the way, characteristically is a very bearish time in terms of seasonality. Now, the second main variable I want to talk about today is dark pools. So you can see here on the fourth one down, the fourth tab, dark pool levels feature of Cheddar Flow. We can see the amount of premium hitting the tape each day in the dark pools on whatever ticker, but specifically for SPY, which is what I'm tracking right now. This is the main one that I look at. And basically, you can see here we had 2.3 billion worth of premium at this 406 level based on Friday. Now, remember, signature prints are, well, these are signature prints. It's made up of 23 different orders that hit the tape, and these occurred the day prior, but because there's a loophole in the system, they're able to do these orders on European exchanges, and they don't have to disclose these orders until up to 24 hours after they occur and hit the tape. So we are getting them a day delayed, but that is universal, so nobody would know otherwise. But it's important to know that we had 2.3 billion worth at this level of 406 because we want to start seeing, at least if you believe that there will be downside in the fall, you're going to want to start seeing a lot more of these types of prints, like 2 billion, 3 billion plus, hitting the tape as we go up on SPY. So each day that goes by, you're going to want to start seeing them offloading shares that they loaded up around this 375 to 385 range. If you remember in previous videos when we were in this range, I was talking about them accumulating. I was very confident in my thesis of them accumulating around this range, especially before we started to pop off around middle of July, like July 13, 14, 15, and so on. They were starting to accumulate around these levels, and I was pretty confident in that. So I did load my longs along with a lot of other variables. Again, dark pool is not the only thing I check, but it is a main variable in my thesis going forward for any type of strategy that I have. So this is very important to note because we can start to see when this rally and the strength of the rally is fading off once we start to see a lot of consistent days where we see 2 or 3 billion plus hitting the tape in the dark pools. So this was just Friday. If we go back to July 28th, the day before on Thursday, we saw 1.8 billion. So yeah, decent amount, but this one was at 401.26, pretty far down from where we are right now. That's like all the way, let's see, around here at this level. So it is still 2 days we closed above that level, so not as telling, at least for right now, if they were selling or not. But going forward, especially in this range and the range I shared with you for XPX, we want to start seeing a lot of this distribution of shares once we hit those levels, and that can give us a glimpse on if big money is selling before a next leg down. Last thing I want to talk about, the month of August is going to be very, very important to check VIX pretty frequently, and especially watch the parts of my analysis every Sunday, specifically on the VIX. So right now I'm going to be sharing it, and also every single Sunday going forward, which, by the way, if you're not subscribed yet to the channel, do so below by clicking the button. It's totally free if you want to check it out. But basically what I'm looking at right here is a convergence of a few supports around this range. We have a thick demand zone, which is the purple box here, acted as a key support lately, all the way back since like December of 2021. It's acted as a key support and has basically led us to a bounce every single time it's been hit. Only one time did we actually like fall meaningfully below. Otherwise, every single time, like this one right here, this one right here, this one right here, it went up and led us all the way up till around 35, which is a key resistance, by the way, of the VIX. And going forward, if we have a few daily closes above, especially 2, that is very, very concerning for the market, and that would lead to a lot more upside for the VIX at least. But looking at this right now, we have a trend line convergence along with this demand level. You can see here, this blue line, we had it 1, 2, 3, and now this is the 4th time we're touching this. The last 3 times it bounced hard off of it and went up to that 35 level. Every single time, one here, another one here, another one here. So right now we're on this level, we're around the demand zone as well, which is also going to act as a support. So it's very likely we start to see signs of a potential bounce. Now, the question is, will that bounce lead us to 35? And we don't know as of now because, yes, it is very early, but this is very good risk reward for the upside of potentially hitting 35. And also, this isn't something that has to happen very quickly. You can see Other times here it's went up and shot up pretty quick, but also it can consolidate around this level for a while. It doesn't act the same as an individual ticker. VIX is a little bit harder to trade and at least chart. So you are going to want to use other variables like VVIX, which is the volatility of the VIX. When this thing starts to get stronger and starts to get picked up, then the VIX tends to follow a bit after. So those are some things to look at and definitely consider as a part of your thesis going forward. But yeah, between the range of 19 to 22, yes, it's a little bit of a big range, but 19 to 22 is what you're going to want to watch going forward, especially if it finds a bottom around this range. You are going to want to be a little bit more careful on the S&P 500.